Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. September is college savings month, and while saving for college is important year-round, September is an especially good time to inform and remind the Trade Talks audience that 529 plans are the most effective way to save for higher education. Joining me to discuss is Richard Ellis, Executive Director with My 529. Richard, it's great to see you again. Welcome back to Trade Talks.
Jill, it's great to see you and good to be back.
How has the pandemic affected investor behavior over the past 2.5 years?
It's been really interesting because we've had extremely volatile markets during this time. When the pandemic hit in March of 2020, we really saw withdrawals out of the plan slow significantly as students stopped going to school, deciding what they were going to do for the next year. Interestingly, in 2021, though, that picked up and we're back on trend where we expected it to be. I think the great thing that happened is that account owners continue to contribute money, not just in our plan, but I think the industry in general saw account owners continue to have strong contributions into their accounts, which I think is a great sign, especially in volatile markets.
Many are questioning the value of education. Why should they continue to save?
I think most people agree that there's value in having some type of technical training or education beyond high school to help increase your earnings potential. Everybody should be doing that. I think the bigger question is, how do we best do that? And I think people are beginning to rethink when it comes to the value proposition. Should I have my child go to a community college for 2 years before enrolling in a 4-year institution? Should they look at trade or technical school? Maybe they can get what they want that way. I was listening to a radio host here locally yesterday who was talking to a high school principal, and they were talking about one of their IT programs, and kids were going straight out of that program, working for some of the technical companies in Utah, learning to program, not needing the 4-year degree because they had some skills. And so I think people really have to evaluate individually what's the best fit and where do they get the best bang for their buck.
Yeah, Richard, I'm glad you brought that up because I think sometimes we think of 529 plans in college exclusively, but the fact that they can be used for technical and trade schools is something very valuable to have pointed out. Are there any headwinds that you're seeing in the industry?
I think this continued market volatility makes it difficult. People are concerned about putting money into the markets. But we still, like I say, continue to see contributions coming in. It's slowed a little bit. Account growth has slowed down. Last year was a record year for us, but we had pretty strong markets. The first half of 2022, we've seen in our plan, and I think industry-wide, some slowing in new accounts as people, I think, are a little hesitant to invest their money in the markets. But, I think that dollar cost averaging principle makes sense, that we ought to be doing that, even though the markets may be a headwind at this point in time. Over time, it will pay off. And that's how you have to view saving in a 529 plan is it's a long-term investment.
All right, Richard, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.